hired as a CEO, and within 5 months of when we acquired it, my goal was to double it within 6 months, and I was like, I really want to improve myself and try to see how what I can do and get my hands dirty and give it my all, and was able to do it within 5 months. So
All right. Well, on today's episode, we have Akeel Jabber, investment director and one of the founders of Horizen Capital. Welcome to the show.
Hey, thanks for having me, Pek.
Yeah. So tell us a little bit about Horizen Capital.
Sure. So we're, I guess, a private equity kind of investment fund. We acquire and look to invest in SaaS companies. Our typical sweet spot that we like to acquire for companies are, doing anywhere between 1 million and about 5 million in ARR. So that's kind of our sweet spot. B2B SaaS is what we like. We take controlling stake of the company, so at least 51%. Generally, these are founders who are burnt out, or they're tired, or they want to move on to another company, or they just hit the plateau in terms of where they think they can scale it. Our area of expertise is really on the growth side. So we come in with our marketing playbook, our growth playbook, and we see how we can really add fuel to the fire and take that company to the next level. And that's what we've been focusing on for the last couple of years.
Yeah. Well, that's what I'm hoping to get out of this episode is, besides being a commercial for Horizen Capital for some of the startup founders on this show and people watching, also, maybe share some of the insights of the playbook.
Sure, we'll give as much as we can. Obviously, some of it is confidential, but I'll give you some examples, tips, tricks here and there. So yeah, happy to share what I can.
Great. Thank you. So before we proceed, I'd like to give a shout out to the people who listen to the show and give us great reviews. So shout out to IFX13, who gave us a review, a fresh perspective. It's nice to hear about different founders and their paths to success rather than the repeats of the same people over and over again. Also, I learned things about the infamous Pek. Like what? I don't know.
Your Mortal Kombat.
Yeah. So yes, for those of you who don't know, the fun fact about me is in a previous life I used to do the moves for the martial arts, the fighting game Mortal Kombat, the martial arts moves for the fighting game Mortal Kombat. Yeah. Do you know that game, Akeel? Have you heard of that game?
Of course. I was crazy about that game. So actually, Jean-Claude Van Damme. I used to mimic him. So actually, I have my black belt in karate. So if you guys stick around to the end of the episode, me and Pek are gonna do a Mortal Kombat version, SaaS version or something like that.
Yeah, we'll try something over Zoom here. Although I don't practice it anymore. I think kind of like that was a stage in my life, and then I was very serious at it. The Mortal Kombat piece was really small, or really my passion at the time was the martial arts, which led to that role. Like if my martial arts wasn't good, then I wouldn't have been selected for the role. But that's like a small piece that I think has a lot of impact because a lot of people recognize that game and either have played the game or have fond memories of it and whatnot. Yeah.
Yeah.
What about yourself? How long did you do karate, and when did you start, and how serious was it?
I was a lot younger when I started. I was definitely I was less than 10. So it was over 15 years ago, but I did it for, solid 4 years, super consistent. Like when I started, I loved it. Like I just love fighting. I don't know, there's something about it just got me going, and I'm a big guy. So I just how can I pound these little kids? No, I'm kidding. I wasn't a bully, but I actually got bullied as a kid because I was a lot fatter then. So maybe it was my way of, dealing with it. But no, I loved it. Like I would go, 2-3 times a week, and it was a friend actually who introduced me to it. He started at the time, and I got hooked. And 4 years later, I got my black belt. The black belt exam was probably the hardest thing I've ever done in my life at that time. Like it was 2 days. I think, the first one is about 8 hours long. Your whole 6 months before that, they're prepping you just for that exam, right? Like this is and it's super physically exhausting. I almost passed out. I remember the first day, and the second day, I actually felt, you're in a big dojo with hundreds of people, going from all over I think the city or the country. I don't remember. They all come into the same place. I think they do it once a year. And yeah, I was so happy that I finally got that black belt. That was an ultimate achievement in your kid life, or whatever at the time of your age of getting that black belt. So I don't know how that is now. What's the black belt if you compare it to in the investment space or marketing or business world? But I'm sure there's a level that I'm trying to achieve internally, and I don't even realize.
Why? When did you stop, and why did you stop?
It was weird. I don't know why I stopped. Like, I loved it, and then I was getting to a point where I was actually starting to teach. So, I was teaching students, and I really loved it. But I don't know. Like, we went on a trip with a family trip for a couple of months. We went back to India. My parents wanted to go back to meet family, and we were out of school. And then when I came back, I don't know. I never got back into it. I think it was just like a shift in mind and mindset, and it's weird how everything can just turn around once you're out of it for a little bit.
Mm-hmm.
Um, yeah. So I can't tell. I don't have a good answer for that. I think I would love to go back. I think to somebody, like I did some kind of martial arts today. I don't know what the equivalent would be. I don't know if it'd be, a lot of people talk about Brazilian jiu-jitsu these days, and they're super, talk a lot about. I don't know if I would enjoy it. I don't know. I don't understand the technique of it if it's the same as the high impact of karate, but
Yeah.
I don't know.
Yeah,
Yeah.
I think I'd love to try other, I'd done it for such a long time, over 10 years, that now I would love to maybe try other sports, like maybe Muay Thai or the MMA. Sound interesting. But I'm also, getting way older to do some of
That's
these
true.
young people sport. Or,
That's true.
I like to do it, I don't want to suck at it, right? So if I'm going to do
Yeah.
something, I want to be good at it. But, the body, the mind is willing, but the body is old.
That's funny. I heard somebody was asking that a tweet is like, what is a sport you can start in your 30s or 40s and like actually get like world class at it? It's like I don't think there's that many. Like, do you want to get kicked in the head when you're 30? I
Right.
don't know. Yeah.
Right. You
Yeah.
kind of need that brain power when you,
Yeah.
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 Yeah. Well, I know your background. You were hired on as CEO for some of the companies to either grow them or turn them around. Can you tell us a little bit about some of that background before you started Horizen?
Yeah, sure. So I actually was in the corporate world. So before getting into kind of the online investment space, I was more into investing online. I wasn't investing online. I was investing physically, like in real estate. I have some real estate in Canada, investing in stocks prior to that. And I just wanted something a little quicker. Bought a physical business. We own a gym back in Canada. Still run that. And I was like, okay, I need to move faster. How can I do this location independent? How can I do this in scale and achieve my black belt online? And that's when I found this group called Wired Investors. At the time, they were doing deals. Like I did my first online deal. It was under $100,000. I think it was like 60,000. It was an affiliate site, and I said, okay, like I want to learn how to. I don't have the confidence to go and buy $1 million company. I don't know how to do it. So it was just interesting. At the time, I was in Mexico. The founder at the time, he was Canadian, also living in Mexico, and we just kind of connected. We met, and they just started. They actually just started at the time, did a few acquisitions. So I thought I really wanted to get involved. So came in as a CEO. Actually, so I raised capital for one of their first companies. It was an affiliate site, helped them raise some capital, built the trust with them. Then I wanted to get involved in the company at the time. That was $99 social, and I felt that I could make an impact. So, worked with them, created like a nice game plan that I thought would work. They had good network and their own playbook. They said, okay, well, here's a playbook we have. This was more focused on SEO. That was their strategy that they really did well with the content sites. And then I, built some other roadmaps of strategies that I want to try out. And yeah, so I was hired as a CEO, and within 5 months of when we acquired it, my goal was to double it within 6 months. And I was like, I really want to, prove myself and try to see how what I can do and get my hands dirty and give it my all. And I was able to do it within 5 months. So that was kind of my achievement. Kind of grew there. They were pretty happy with my track record, with my work. They gave me another project at the time, which was increased visibility. So I led that company. We did really well and turned that around. And then I kind of moved up into kind of more of like a portfolio manager. I don't know what the right role is, but I was working with the CEOs. I kind of replaced myself in both those roles and working with CEOs of all their, the SaaS companies as they were doing acquisitions, helping them and focus on the growth side and implementing kind of what I saw work, what doesn't work, taking learnings and applying them, testing them. And then after that, there was, I was kind of invited to be partner in the firm, but it was just a little bit of discrepancy between the different partners. So they weren't, they weren't sure on their focus, what they wanted to do. So I really, really liked, the SaaS side. I felt like that was my sweet spot of where I could make the biggest impact, where I felt like, it was interesting, it was fun. It was that match of like, challenge, interest, and, impact. So I think that, I think that's called flow, where you're in that sweet spot of, all the good places. So I was like, okay, I really want to double down in a place where, I think I found a place because I dabbled in content, I dabbled in e-commerce, affiliate sites, physical real estate. You start dabbling and then you find like, this is what I really want to do, and this is where I really want to double down and get really good at it. And SaaS was what I really like. So decided to spin out and build Horizen Capital and kind of, do. I learned kind of what I learned from Wired, and I learned the mistakes, what worked, what didn't work, and that gave me kind of the confidence to go out and do the same for myself. And we've been almost 2 years now. It's going to be about 2 years that we've been running Horizen, and that's been fun.
Right. Well, growing 99 Social and 2xing the bottom line within 6 months, that sounds really impressive for those of us who struggle with growth. Maybe our superpower isn't growth and marketing. Could you share us, some strategies that work? Maybe if you can't get into the details, but what is your general approach and framework?
Yeah. So what's interesting about growth marketing, I think I was chatting with Amelia from Growth Hackers, and she was saying they've seen kind of experiments across all different, companies who run experiments of growth hacking experiments, and typically 75% of your experiments are going to fail. So yeah, I didn't know that going in, right? You're super confident. I'm going to do this, this, and this. All this is going to work. So so a lot of those didn't work, but I tried it, and I'm glad I learned, and it worked. So what thing really moved the needle? I can share that, but from our framework, the easiest kind of playbook, I think, from day one that you can apply and give you a quick win would be conversion rate optimization. So look at, you have all this traffic. So we like these sites that do have traffic. They have leads coming in. They have flow of they have flow of new signups happening every single day. Self-serve, very low touch. But how do we improve the conversion just by making a few adjustments? So we tried different kind of tests, from pricing, from upsells, all of these kind of made slightly small different adjustments and in terms of revenue of the changes it made. But the real growth happened in our, I think it would be called like product positioning. So we had two sides of the business. One was like the SMBs. So these are companies who are signing up directly. They're paying $9 a month. They're getting 7 posts a week. The other side of our business was actually our resellers. So that was agencies who are white labeling our service, and they were charging, whatever, 200, 300, 500, and we were doing the work on the back end. So what we decided to test out was we were getting all these resellers who were interested. They loved the idea, like, who can do social media posts for $99 a month? I can easily resell this, but they wanted to build a business around that. But the problem was that they weren't committed. And I think in all of this, what I realized is you have to set filters. Like, it's all about filtering your traffic to go the right place for the right people, and how to optimize that kind of traffic to get the maximum results. And it's kind of a whole optimization flow chart. But what we ended up doing is we started charging people to become a reseller. Okay, so just by adding monthly plans to our resellers, we filtered out, like I said, 80% of the people who weren't really serious. And then we built a new revenue stream of charging $99 a month, $199, $399 for people who are looking to start their business, which makes sense, right? Like, if you're going to take this business seriously, and this is basically your whole outsourcing engine, you're going to depend on your business as this is your product. You don't mind paying, $100 a month. And now we're going to give you resources. Now we're going to invest into supporting you to help you build your business. And that actually ended up, becoming like almost double the size of our business just because of adding that stream. And now they're starting to bring, now that they're paying the $99 a month, they're bringing, 3 clients, 5 clients, 20 clients all at the same time. And now, you've basically accelerated that growth of people, the right kind of resellers you want to work with.
Yeah. So it's another way to think about it is like you're qualifying your leads, right? Like the people who are not even going to invest money in it, they're probably not serious. Whereas the people who invest the money, hopefully they invest the time as well. And it's actually, it sounds like a pretty common playbook for like even, if you think the larger ones, right? Partner programs, when you have like different tiers, like bronze, silver, like we're a partner to some of the big ones, SaaS companies. And, if we're a bronze partner or silver partner, like they want some money from you to kind of commit so that they can invest resources in you as well. So it's a good playbook.
Exactly. Well, it's also like the amount of time it takes, right, to get 50 new small businesses versus getting, one agency who brings, 50 of their clients, just, makes more sense to focus on them, right?
Right. So the other takeaway is, focus on the one-to-many hits, right? Not the one-offs.
Exactly.
Thank you for that.
Yeah, if you can.
Yeah, if you can. Yeah. And also the white labeling, right? I think you weren't opposed to being a white label company.
Right? Exactly. Exactly.
Yeah.
And another thing that, so and I think it's kind of adding to that, which is partnerships. So I think leveraging other people's clients, their work, their marketing, their relationships is huge. I think a lot of people just want to go directly to the source, but there's a lot of people you can work with who already have that network in place. And that's the same. Another thing we did was do a lot of partnerships with other businesses who are targeting. So we work with like other SaaS companies who maybe had an email list of 20,000, 50,000, and we would do email affiliate exchanges. So they would blast their email over a week period, or we would do a webinar with their email list and show them, the value of our program, and that worked really, really well. So we did get, send an email to 50,000 people, we get 100 people on a webinar, and we had a really good playbook on how to convert those into sales, right?
And what do they get out of it?
So we typically give them a percentage. So I don't remember at the time, we give them like 10 or 15% recurring revenue on any client that came through them. So
got it. Yeah. So setting up those partnerships where kind of being affiliate as well, right?
Yeah.
Great. Thanks for those tips. Really actionable, I think, really fast. Actually, another episode that we had, the big pivot that was successful was white labeling the platform, because people, like you said, right? People want to present that this is their platform and stuff.
It sounds so simple, right? But I mean, you don't need to build a product. Like, you don't need to do all the groundwork of finding a product. And there's a lot of good people out there who are really good marketers, who are good at finding those relationships, are good at sales, and they don't need to wait a year to develop a product. They can go and start selling day one, right?
Right. Yeah. Well, it's almost, but it's also a philosophy of the company, right? Do they want to build their brand, or
Yes.
do they not mind? So.
Yeah, you just want to make the money, right? Depends what your goal is.
Yeah. What about increased visibility? Are there any, or did some of the tips apply there as well?
Yeah. So that, interestingly, I think similar thing applied there. So we switched. So we used to be a general marketing agency, and we decided to focus. So just like you guys focus on design, and I think you told me that before, where you guys actually say no to a lot of clients, even though it's design work, but it's not really related to what you want to do. We decided to focus on link building, because that was actually a playbook we applied for our SEO, in-house to some of our websites, and it drove traffic. It works, right? Link building still works as part of the SEO strategy. It's one of the highest kind of value things you can do. And yeah, relationships and partnerships work amazing. So we had a relationship. So actually, like, Neil Patel was an investor in Horizen, at Wired at the time. He was a small, GP. So this was before he started Neil Patel, I think Neil Patel Agency, or his marketing agency recently. So he would get some of these leads, and he would work with his partners to just refer them over to. So we actually worked with some of his clients or his leads who needed link building, and then we started developing those. So we worked with other agencies who did SEO, or they did everything, and they're generalists. And we said, hey, like, we'll kind of become your partner if you need SEO, link building. That's all we do. Come to us, and this is our process. So, and we could show them with our own websites that we're doing it, that we invest in, and I think that kind of gave that credibility, and we did really well, just being focused. It helped, from having a broad team. We just had like really focused team, really focused process, and I think that really helped us do well.
Is this now part of the portfolio company?
Yes, I don't know if Wire still has it. I think they might have sold it off.
I see.
But yeah.
Great, thank you. I'd like to get into the business, your current business, Horizen Capital, and understand the mechanics of a PE firm that focuses on SaaS companies. First, being a capital company, you had to raise capital. Can you tell me more about that?
So we did things a little differently. So we had that option of going out to raise an actual fund. Versus what I can't remember the name of the actual term, but we're kind of like independent sponsor, or where we raise the funds. We have pre-committed capital from our investors, and then we actually raise it. We don't take the money. We don't charge fees until we have a deal on the table. So we have our LPs. We have our group of. We actually have an investment club. So we're very kind of exclusive who we accept into investing in our deals, because SaaS is hot. If we bring a good deal, there's a lot of capital these days. So we want to work with the right investors, and I think there's a lesson there too. Like, when you're working with investors, people think just take any money. This is a relationship. Just like dating, you're gonna be in this person with 5 years, 10 years, whatever. Like, you have to make sure it's the right person, because they're gonna be a pain in the ass if you're for like the next couple of years, like just bothering you. So make sure you work with the right people if you're raising capital. Just a quick note there.
I think that's true in general business. Like, we, even with clients, you don't want.
Yeah, exactly. Same thing, right? Pain in the ass client, pain in the ass investor. So we thought let's kind of curate it. Let's be a little bit more private. So yeah, we didn't raise a fund. So that's something maybe we'll look at. We haven't. We're not sure if we want to do that. I think we like this approach where we're not forced to have pressure to do deals quicker and sacrifice quality. So we would rather wait for the right deal, and once we have the right commitment. So like I said, we're looking at deals between 1 million to about 5 million ARR. We have a certain criteria, at least around for 3 years, low churn, at least, less than 5% per month, LTV over, like 1,500, 2 grand is what we like, B2B sales, based in Europe, Canada, US, doesn't matter where. And then the valuation. So valuation is probably the biggest topic, and probably, sorry, the area of pushback we'll get is founders just have super high expectations. But generally, in terms of like the valuations right now for this spot, if you're growing, let's say 10, 20, 30% year over year, you're not growing like VC hockey stick growth, then we're paying like 2 to 3x ARR. Kind of how we value it. But yeah, I mean, there's different. We're not competing with VCs, and then there's like the smaller guys who are just buying based on cash flow. And yeah, so we raise capital. So our process is like, if we like the company, we agree on valuation. We do some some due diligence up front. We sign an LOI, and then we close pretty quickly. Like within 60 days, we have an LOI. We get a due diligence team. We'll look at everything, get the money from our investors, and then we'll close after that.
Yeah. Because it's not a traditional fund, and so you don't have like typical fees. How do you like, what's the team like, and what are the expenses like? How do you pay for the expenses, stuff like that?
Yeah, good point. So that was a challenge, right? Of like, okay, when we started this, do we sell our souls for cash flow, or do we find a way to for private? So there's like the search fund route, there's the private equity route, where you're kind of giving up freedom and flexibility, which was kind of like defeats the purpose of what I see as an entrepreneur and how I wanted to build the company. So we do consultancy with a few SaaS companies. So we talk to a lot of companies who are not looking to sell right now, and we have really good deal flow. And they're either in one of two stages. They're like, hey, look, I don't want to sell right now. I'm actually looking to raise capital. I wouldn't mind, getting a growth equity, maybe selling a part of my company, maybe like 20, 30%, but I still want to be the founder. I'm still excited. I'm still motivated, but I do want to invest in growth. So we're like, okay, well, you don't want to sell the company right now. Maybe we'll come in for a smaller amount, and we'll take a consultant fee for managing and applying our same playbook of growth and growing your company. So we work with the companies that way, and that kind of pays the bills. And then we also do M&A. So the other side is we have a few companies come to us, say, look, yeah, I want to sell, but I want to sell to a strategic player because I want that integration. I want to be part of that team. I don't want to just sell to any financial buyer. And also typically strategics are going to write bigger checks. Their valuations, if they like everything, if it integrates well, if it can be a quick win for them, we have seen anywhere 5, 6, 7, 8x ARR, which we're not going to pay, right? So so that's the other side of the business, is our M&A side, and that's how we fund kind of the team. And now we're about, I think, 9 people or so.
How many people?
I think we're 9 right now. Yeah.
Oh, great.
Yeah, including myself. So
awesome. I'm gonna take a pause here and go out of character.
Go for it, man.
Yeah. No, that was really good. Anything? So we kind of covered, the early stuff, and now we covered Horizen. Anything else you want to talk about?
We can talk about risks of the what to look for in terms of red flags, risks.
Yeah. What are your decision-making criteria, right? And is that kind of like, or mostly just risk?
So risk and then also structure. Yeah.
Structure.
I mean, things that like client concentration. So, if you see client, you have a company who has like, let's say, 30% of their revenue comes from, one client, that's generally a red flag.
Yeah. Okay. Yeah. Let me ask that in a different way.
Okay.
Yeah. How do you determine what to invest in? What makes what's your thesis? What are some risk factors? When you do your due diligence, what are you looking for in terms of red flags, and what are you looking for in terms of good flags?
So obviously, I'll start with, our are the best things we look at. If we look at a company, it's like, wow, this is a gold, this is a plus company. We have a checklist of, I think, about like 100 different points that we go through, and we check, the market, how competitive it is, what's the churn rate, what's the team like, the team in place, do they have systems, do they have processes, can I operate this? Like, is it really dependent on the founder, or if somebody else comes in, it can easily take over from day one. Client concentration. So some red flags I would say is client concentration, or even you can see this with traffic concentration. So we see this with SEO, and you can also apply it to SaaS. But let's say 30% of your traffic comes from one search keyword, and that's where it's driving a lot of your revenue. I think that's generally a no-go for us. High churn. So if your clients are churning, we've seen a lot of companies with double-digit churn, very hard to manage. That's another problem that is a little bit more challenging to work with. And then same with the client concentration. So if 30% of your revenue comes from one client, so you have 10 clients, and 30% comes from one. That's a little bit of red flag, because what happens is, what if we lose that client, right? After, maybe there's the relationship with the founder, and as soon as we take over, a month later, you lose that 30% of revenue. And a lot of people say you can structure that into the valuation, right? And you can do an earnout, you can do some, seller retention, which is fine. But okay, let's say you didn't pay for it really, because you did an earnout, and they stuck around for 6 months, and then they leave. They do leave, and you don't pay that earnout. But what happens now is you're stuck with a company that's doing 30% less. And it's a lot harder to get back that revenue. So now you're working with a company, okay, even though you didn't pay for it, you're working with a lot smaller company than you thought you were. Now you have to, find ways to cut costs. Now you don't have as much money to invest into growth. And now that kind of changes your entire mindset of how you actually operate, because you're now, more constricted of how to play. So that's another red flag. Relationships and businesses or sales that are directly tied with the founder. That's a little difficult. What else? So we got a couple, but those are probably the main ones I look at. Obviously declining revenues. That's another one. If the revenue is declining, something's going on there. I had this somewhere. You can cut this out. I had this somewhere.
I
can like it's just blanking out. Yeah.
No, that was very good. Like, there's a lot of, some of the stuff you look for are generally just healthy business practices, right? Like, can you diversify your client base? Can you diversify your, does the business have a diversified, kind of channel of business, or do they overly rely on one channel? Is it kind of everything depends on the founder, or do they have processes for everything in terms of either getting customers or, and can it run without the founder? Yeah.
Exactly. And another thing that we really, really like is another thing we really, really like is companies where founders are more product led, where they've done a really, really good job in building a product. A lot of the marketing has been done just through word of mouth, through product led growth, and they haven't done any marketing. So for us, that's kind of a sweet spot where these guys are engineers, they're product guys, or they're a team of software engineers, and they've done a really good job in marketing, but they've never done any really good at product, but they haven't done marketing. That's where I think we come in, is like, okay, well, you're done a really good job with the product. I don't think we can do a better job than you, but here is our competitive advantage, and we can help you get this out to market better.
How do you keep that? I would call it maybe product juice then, because say they got everything else figured right, but the founder led the product, and then you buy out the founder, then the product maybe becomes stagnant.
It'll be reflected in the numbers. So you'll typically see that like in the churn rate. You'll see that in the growth rate. You'll maybe not in the growth rate, but churn, LTV. How sticky are the clients, right? What's the conversion rate of trial to users to pay to signups? If referrals. Expansion revenue. If you're seeing those things in the numbers, that kind of gives you a good picture of like where the company is, and then that gives you time, right? So it's not like the whole product team is leaving. It's just kind of the visionary of the product has taken it to a good step, and then generally the founder will give us a roadmap like, look, this is what we'll have that feedback from our clients. This is what we would build. This is what we're planning to build anyways, and then we'll just keep running with that. So
got it.
Yeah.
Can you talk about some of the recent acquisitions that you made?
So I can talk about maybe a deal we're working on right now. What would you like to know? I mean, we have there's every deal is so different. Like
Oh,
it's
is it?
interesting. Yeah, it sounds like it's a cookie cutter thing, but when it comes to deals, like look, there's companies who just did like they're full of debt, right? Like they took on a company, like the debt is more than like what the company's worth. So we're actually doing a deal right now where we're putting like very little down, but the company's kind of on a downtrend. So this is like a battle too, right? You have a company that's not doing great. It doesn't typically check all of our boxes because it's not growing. It's kind of slightly high churn. They have all this debt, but there's also a lot of growth opportunities. So it all comes down to risk. I think people look at investing like a game to growth, and I think the growth is like the butter on top. But when you approach the business, you have to look at it like, okay, what are the real risks? How do you de-risk this first, and then put all the measures in place? Can you actually de-risk it first of all, like in a short time period? This is how we can do it, and then we bake that into the valuation, into the price, into the structure, and then from there we move on to the next step of like, okay, now we can grow it. So for this company, like I said, there's a lot of risk in it, but there's also a lot of opportunity. A little bit, challenging, but it's beneficial to us because we've structured it in a way where we're putting less down and rolling over a lot of the debt, and there's less risk to us. So you just have to, people always think you need like cash to acquire these deals, but if you structure it properly, and you can account for all those risks and you know what to look for, due diligence, don't skip due diligence. I actually just had a call before this podcast. I was talking with the guy. He's looking to do a deal himself, and he bought a company off of was it Flippa? Yeah, so Flippa was his first company he bought like last year, and he's like, he bought an e-commerce company, and they asked him, a couple of days later, he put it into escrow, and the founder was like, yeah, sell it, send me the money, send the money. He didn't know anything better. He didn't know how to do due diligence. He just saw, how much revenue they were making. And then when he let go of the money, he goes in and he was, getting an audit done by an external company. And they're like, all these transactions are fake. Like nobody's actually buying any product. Like the cost, you're selling it for less than what you're paying for. And like, so obviously this guy was clueless when it came to due diligence. He just saw, his first website or first company, and he lost all his money. But, do due diligence and don't skip out on that. Like, I think that's your insurance. And, people think like, spending $20,000, $30,000 on due diligence or more, but it's worth every penny. And it's funny because I heard this other day. Somebody paid for due diligence, and they were like upset that all these red flags came, and they're like, "Oh, do I still have to pay for this?" I'm like, "No, that's exactly the point. Like, you should be happy that you're not doing the deal because they found it for you. But like, don't look at it as like a waste of money. You just
Right.
saved yourself a headache for the next 5 years, 10 years
You're
that you could have
owning a
lost money."
lemon. Yeah, yeah.
Right.
In terms of tips for due diligence, where so it sounds like there are companies that do due diligence.
Mm.
And well, is there, for the DIY folks, what are some of the things that you have to do with
Mm.
due diligence?
So look at the traffic. Get access to the Google Analytics. That's first thing we look at. Second, look at their, get access to their Stripe account, their, whatever payment system they're using, PayPal account, and look at their financial statements. I'll always ask for the last 3 years. So just to look for trends, see what's kind of coming in and out. Don't just look at the last couple of months. And then, just compare it to the bank statements. At some point, you have to get the bank statements and match numbers to numbers and make sure it's real and legit. During kind of LOI, you have more access. Generally, we get a little deeper and we can, maybe call clients, make sure they're legit, talk to their team members, talk to, their investors if they have on board, and then you just get a sense of what the real story is, because it's never what they present it to be. Of course, like the
Of
founder
course.
wants to sell the company, they're not going to present you. Sometimes they'll present you all their flaws, but sometimes they just don't know like the negatives, or like what's really going on, or they're not paying attention to some part, and that's you coming in with a bird's eye view to look at everything. So look at the financials, look at the traffic, check the quality of the leads, check the the actual flow of the sales, talk to the sales team, talk to their product team, and you'll get a better idea.
Yeah. Well, what are some of the some stuff that you've uncovered maybe in your experience in the past that was like, oh man, I wish I'd found this sooner?
Man, too many. It happens a lot, right? And it's all learning,
Yeah.
right? But so I've had the one where actually the first site I bought where it was so so this was an AdSense site. It was, and all the traffic was, I think like 50% of the traffic was coming from one page, and then it got banned from Google. So Google actually banned the account and they shut it down. It took a while to get it back, but all that time we were losing revenue.
Wow.
What else? With companies, so what else? Hmm. Yeah. Okay. So here's another one. So another company, a SaaS company we bought, they were showing that they're making all this revenue. They're running paid ad campaigns and they're running Google AdWords and Facebook, and they were spending I think like $5,000 a month, let's call it, on I think Google. And when we went in, and supposedly that was attributing to how well the CPC was and their CPA, and they're showing, hey, like we're getting like 5-to-1 LTV to CAC ratio. I was like, oh, cool, like they have something good here. And then when we go in to really dig in and see, like for the last 6 months, all the conversions or clicks or the conversions that were happening were actually off of their branded name. So like the name of the company they were bidding on. And I would understand that if you're, ranking kind of below. But then we checked all the countries so this was like in Latin America, all the countries that they were actually ranking for, and they were already number one for all of them. So literally make zero impact to the revenue. So shut it off, and it didn't do any difference. But to the story to the sellers, like, hey, we've got this machine that's printing money, and our CAC to LTV is amazing. But once you actually dig in and see what's actually happening, it's like, no, there's nothing here. Just
Nothing
fluff.
happening. Yeah, yeah. So it's you have to dig into all the maybe success factors that they're
Yeah,
claiming. Yeah.
yeah, yeah. Verify, trust, but verify, right?
Trust
But,
it. Yeah, yeah.
mm,
Well, thank you. I've learned. I feel like I got a little tour on what it is like to have the PE firm here. And in terms of operations, like what can one expect to, if somebody was thinking of starting their own PE firm, what can one
mm.
expect to need in terms of operations and stuff?
um, it's all about relationships. In this business, it's patience and relationships. So the guy I was just talking to before, right? He said it took him, he's been looking for a deal for 4 years and he still couldn't close. It's a long-term game. I was talking to, I don't know if you know Constellation Software. They're one of the bigger software PE firms in the space. I think they said like on average it takes them 3 years to close a deal. So from the time they
Oh,
first
wow.
talk to somebody to actually close a deal, I mean they're probably a lot more selective and they can pick and choose. But 3 years is kind of the sales cycle. So it's a patience game. And if you're looking at it like I want to do a deal tomorrow, it's not going to happen. In terms of how you rank an acquisition, you have to look at this mindset. Like obviously the first thing you want to do is do an A plus deal, like do a great deal, invest in a great deal. That's obviously everybody's goal. The second best thing you can do is do nothing. And then the third best thing you can do is do a bad deal. So it's actually better to do nothing. And as hard as it sounds, like people are like, oh, I got to do something. Like I'm just sitting here talking to people and I feel unproductive and I'm not doing a deal, but it's a lot better than doing a bad deal. So be patient, build relationship, like, referrals, friends, network. There's a lot of people out there and, build that trust. And if you're raising capital, do good to your investors, keep them, communication, be transparent. And I think like it'll go a long way. Like in this thing, like you screw over one person, everybody knows, and it spreads like wildfire. So yeah, it's all about relationships and build it as build a strong foundation all around you if you can.
And with the way you structured your capital fund, like do all the investors have to participate? Like, yeah, you have this deal right now, for example, that you mentioned, where it's debt. Like, does everybody have to, or do some of them pass, or how does that work?
No, so let's say we're in case we need, like we'll go like 50% debt, maybe we'll go 50% equity. Let's call we're putting $1 million in debt and $1 million in equity. We'll say, look, we're buying this company. This is the valuation. This is a page of all about the information of what we found in our due diligence. We're looking to raise $1 million. First, kind of first who comes in and wants to invest. This is our minimum. We generally our minimum check is like 100K. So kind of the first 10 or less who will come in for that amount. Say yes, I'm in. Then once we hit oversubscribe, then we'll close it out and close the deal.
Yeah. Who are your typical investors?
It ranges. We have people working in oil fields. We have tech founders. We have like I just one of our investors today I spoke to. He's a physician and he's a healthcare executive, and then we have other people who've exited companies and are looking to deploy some of their capital. And then we also have some bigger firms who are who've done a lot of acquisitions and they also want to be part of our deals.
Oh, awesome.
Yeah.
Oh, thanks so much. This is very insightful and enlightening. And so how does someone get a hold of you, Akeel?
So I'm in a lot of places. So I also have my own podcast. You probably checked it out. You probably heard it, right?
Yeah.
SaaS District. You can check me out. So subscribe there. I'm on Twitter a little bit, Akeel Jabber, or on LinkedIn. You can say hi or email me, Akeel at horizencapital.com too.
Yeah, I'll have to plug SaaS District. It's really good. I was listening. I didn't even realize it was you. I've been listening to it, and then when you contacted me, I didn't even put two and two together. So
I know you're like, who's this
like,
Akeel
who's
guy,
this?
right?
Who's the guy? I'm like, wait a minute, I've been listening to you for a while now.
You can
No,
recognize the
really,
voice.
really,
Yeah.
really good podcast. So go check it
Thank
out.
you. Thank you.
Awesome. Thanks.
Thank you, Peg. Appreciate it.